Hello everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hi.
Thank you for joining us today as we are looking at the fundamentals that are driving the markets currently. So Peter, a new day, a new week. What's up in the FX market?
Well, we had a rather quiet ending for the past week. The US dollar remains in a rather range-bound movement in the fundamentals. We're still having extensive market worries about a possible recession, especially in the US economy. So I would expect a cautious market sentiment to be maintained today. At the same time, or if you prefer on the flip side, commodity currencies such as the CAD or the Aussie could take a beating as they are considered more sensitive to growth factors. On the other hand, we have to note that it's the 4th of July, the US stock markets are closed, so it may be a little bit more easygoing.
Interesting. And how about the US stock markets?
Well, US stock markets actually ended Q2 in the reds. We expect them to move even lower in Q3. Probably recession worries could drive US stock markets at lower levels, given also that the recession fears may be mirrored also in the earnings results, which will be reported for Q2. And thus, we may see overall traders advancing cautiously into Q3, given also that we have an extensive holiday period for the summer, with lots of traders possibly opting to stay out of the market at least until August, including August, until September. Yeah.
And how is gold behaving?
Gold still remained also in a range-bound movement. However, I would highlight here the negative correlation with the US dollar.
Okay.
And I would expect it to remain on display for the coming week. We have a number of financial releases which could create high volatility during the week for gold's price. And definitely for the US dollar, thus also be adversely reflected on gold's price as well.
And how are oil prices moving on the commodities front?
Oil prices seem to be caught in conflicting fundamentals. On the one hand, we have the recession worries, which tend to weigh on the demand side, increasing worries about the possible demand for the commodity. On the other hand, though, we may also be experiencing a tight supply for oil, which could push oil prices higher. So on one hand, we have demand which is dropping, and that is weighing on oil's price, while at the same time we have practically a tighter supply which pushes them higher, cancelling the effect out.
And what are the main financial releases for the day?
We already had from Switzerland the CPI rates. They were for June. They accelerated beyond market expectations. It was characteristic that Usdchf at the moment of the release dropped substantially. And I would also be highlighting the release of Turkey's CPI rates also for June. We maintain our worries for the Turkish economy, especially given the high level of inflationary pressures in the Turkish economy, and at the same time, the unwillingness on behalf of the Central Bank of Turkey to actually do something and tighten its monetary policy in order to fight inflationary pressures within. I would note the possibility that the Turkish government may even weigh in and actually ask for even lower rates, which could create a negative spiral for the Turkish economy. Other than that, we could also note from the Eurozone, the Sendex index, which was already out as well for July. I would say a less pessimistic outlook about the economy of the Eurozone, but still not convincing. And I would also be highlighting from Germany, from the Eurozone, the PPI rates for May, which are expected to remain rather unchanged on a monthly level and could weigh a little bit on the Eurozone swap. I would also like to note from China during tomorrow's Asian session, the Caixin Financial Services or Caixin Services PMI figure for June Should there be a drop, we may see the Aussie wobbling a little bit.
And what about the monetary front?
On the monetary front, we have RBA's interest rate decision tomorrow. The bank is practically, the market has fully priced in the possibility of 25 basis points rate hike, and partially has priced in also the possibility of a 50 basis points rate hike. So for the Aussie, given the hawkish expectations of the market, RBA will have to deliver something more than a mere 25 basis points rate hike for the Aussie to get some support here. We would expect a 50 basis points rate hike to actually boost the Aussie. However, I would also be highlighting the forward guidance, which will be provided in Governor Lowe's accompanying statement. And should it be hawkish enough, we may see actually AUD reversing some losses and gaining substantially.
Any last comment, Peter?
Well, I would be noting the public holiday of the US due to the 4th of July. I wouldn't exactly say that thin trading conditions may apply, but overall some additional caution would be advisable at this point.
Nice. Thank you, Peter, for your time.
Thank you.
And everyone for watching. Join us after a short break for technical analysis with Peter Yasir.
Welcome to the technical analysis part of the presentation. For today, we make a start with the US dollar index. Low volatility, sideways movement, and a clear-cut sideways movement here. Let me make the necessary adjustments. There you go. Just a tad bit lower label. So overall, we tend to maintain a bias for a sideways movement of the index, given also its price action for, let's have a look, since that's the 10th of June, where practically the price action of the US dollar index had remained between the 105.55 and the 103.20. For you guys which are asking, the US dollar index actually measures the movement of the US dollar against a number of its counterparts. And it more or less tends to average and provide a clearer view on the USD direction as such. So once again, we tend to maintain a bias for a sideways movement. It's characteristic that the Bollinger Bands have converged, which is an indication of lower volatility, while at the same time the RSI indicator below the 4-hour chart seems to be remaining above the reading of 50, but also seems to be actively aiming for the mid-level, implying a rather indecisive market if it reaches that level. Nonetheless, for our bias for a sideways movement to change in favor of a bullish outlook, we would require a clear breaking of the 105.55 resistance line, which provides resistance on the 15th of June. Higher than that, we would be noting also the 107.55, and for extreme bullish scenario, the 109.90. To the downside, and should the bears take over, I would expect the price action of the USD index to break the 103.20, which provided support around the 16th of June, while also provided some resistance here, and that was around the 20th of May. Lower than that, we also note the 101.30, which provided support. It was a beautiful touch, reversing the downward motion and sideways movement around the 30th of May, and even lower than 99.60. Practically, the sideways movement may be providing an opportunity to make some gains when the price action nears the 105.55 by selling the index, while at the S1 should it be approached, we could make some profits on the rise by buying it, but there is substantial degree of caution to be applied here, given that the index could break either of the pre-mentioned levels at any given moment. Let's have a look at Euro USD. We're adjusting. Okay. Euro USD practically reflecting US dollars in activity. Seems to remain also rather stable. That's at least for the past 24 hours, actually 36 hours. There was some volatility, but not much. I would dare to say that once again the Bollinger Bands are converging, providing some indication that note how the upper Bollinger Band is dropping, about to meet the medium and the lower Bollinger Band, implying some lower volatility for the pair. We note also that the downward trend line has been broken clearly now. There's no question about it. We tend to maintain our bias for a sideways movement once again between the 1.0480 and the 1.0355. In a rather tight range-bound movement, there is an indicator which is on the rise, nearing the reading of 50, once again implying some inactivity for the pair. Now, should there be an extensive buying interest on behalf of the market, we would expect practically the price action to break above the 1.0480 and start aiming for the 1.06. Note how the 1.0480 practically proved its worth as a resistance line. That was the day before yesterday, the day before Friday. Let's have a look. Yeah, that was on Thursday, the 30th of June, while it also proved its worth as a support line on the 23rd and the 22nd of June. I would be noting this level as well. So it was multiply tested this level, both from ups and down. It should be a level that traders seem to be taking special notice of. I would be also highlighting in case of a bullish outlook as the next possible stop for the bulls, the 1.06, which provided support once, twice, 3, 4 times, and even more in the back, 5, 6 times. So it's another important level which should be taken care of. And in an extreme bullish scenario, we may be seeing the pair approaching the 1.0755, which provided resistance once, twice, 3, 4, aimed for 5 times. To the downside, and should the bears take over, if we have a selling interest, we may see the price action breaking the 1.0355, which was aimed for here and here, and start aiming for the 1.0210 or even lower, the 1.0070. However, that's extremely low. Note how, interestingly enough, the outlook for bearish movement of the pair is nearing the parallel levels of Euro USD. That's the reading of 1. That's characteristic of how low the pair actually is, and it would be even more indicative if we have shown the daily chart. You can see how steep the drop was, practically from around the midst of February up until that would be the lowest level reached the 12th of May. Despite some efforts to correct higher, it failed to do so and dropped once again to low levels, once again trying to rise, once again dropping lower and reaching the same levels. It would be practically, let's have a look in the monthly chart, a level not seen since the January of 2017. So we're talking about a 5-year low here, 5 plus 5.5 almost. Very, very interesting. Our chart once again. Now the fact that the pair is trading at such low levels could cause some hesitation on behalf of the bears, and it's characteristic that the pair has stabilized once again after hitting the 1.0355. Let's have a look at GBP USD. Now that's interesting. Note how table, this is the 4-hour chart, has actually broken rules, dropped. That was on Friday. Substantially dropped, actually. Yep. Until the European session, actually at the end of the European session, started to rise once again, correcting higher and re-entering the 1.2070 and the 1.2175 corridor. So overall, we tend to maintain once again a rather sideways movement bias between the pre-mentioned levels. And we must note that that's another interesting feature which we would like to highlight. Note this downward trend line. Note how it was tested once, twice, 3 times, and it's actually being tested once again. So should the price action of cable actually break the downward trend line, that would be another indication, a signal if you prefer, implying initially at least a sideways movement for the pair. I would require a clear breaking of the 1.2175 and for the pair to start aiming for 1.2325 in order to switch my outlook from a bearish one to a sideways and then to a bullish one. Other than that, should the bears take over once again, I would expect the price action to break the 1.2070 and start aiming for the 1.1935. Now, we'll have a clearer view, I think, during the American session, albeit we have to note that the Americans are closed for the 4th of July public holiday. Nevertheless, should the stabilization be maintained, we would definitely switch our bearish outlook in favor of a sideways movement bias. Please note, by the way, that on a fundamental level, Johnson's government seems to be in hot water once again. And that could be weighing on the pound a bit, but I don't think that the market's going to be actually reacting that much on that issue, for the time being at least. Stabilization could occur, and the pair remain between the 1.2070 and the 1.2175. Let's have a look now at Usdchf, where you have BOJ against the markets. We have to make a correction here as the pair dropped, breaking below the 135.60 support line, which is now being turned into a resistance line. Let's readjust. But overall, the sideways movement between the R1 and the S1, the R2 and the S1, remains. Let's make the necessary adjustments here as well. Boom. 135.6. So the ultimate resistance line now is being placed at 138.3. The second resistance line at 135.6. Sorry, 136.75. The first resistance line to be placed at 135.5. which actually serves more like a mid-level between of the sideways movement between the R2 and the S1. First support line being placed at 134. Second support line being placed at 133. I know it's pretty close, but still 100 pips are 100 pips. Should not be underestimated. And the final support line being placed at 131.30. Once again, we see the chance for a sideways movement between the R2 and the S1, with the R1 being the mid-level, as practically the price action seems to be revolving around this level. However, there were some moments where this acted as a resistance line or even as a support line, so it should also be kept under watch. For the time being, the RSI indicator is rising, nearing the reading of 50, which could more or less enhance the bias for sideways movement between the pre-mentioned levels. Nevertheless, should the bulls take over, I would expect the price action to break clearly the 135.60. Break also definitely, I would require this, the 136.75, and the price action to start actively aiming for the 138.30 level, or even higher, that's the 140. We are at a level which could instigate a possible market intervention by BOJ, by the way. On the flip side, should the bulls take over, the bears take over, we may see the price action breaking, actually dropping, breaking the 134, and start actively aiming for the 133. And in this case, we may see a clear downward trend line starting to form, breaking possibly also the 131.30. Sorry, aiming for the 131.30. That would be the ultimate bearish scenario, given also that we had a touch that was around the 17th of June, 16th to the 17th of June. Let's have another look now, and that would be practically for USD CAD. USD CAD, which bounced nicely. Proud analyst, once again. Let's have a look. Make the corrections. Now, note how the price action of USD CAD actually bounced on the 1.2865 support line, which it's not the first time. We had it here again, and here, and here, and there's a resistance line here, here. So practically, it's a level which has been tested a number of times by traders, proving its validity. Should not be underestimated, as it works once again now. For the time being, we tend to maintain a bias for sideways motion for the pair between the 1.2970 and the 1.2865. Now, should a selling interest be expressed by the market, we would expect a clear breaking of the 1.2865 and for the price action to actively start aiming for the 1.2730. While the ultimate bearish scenario here would be the 1.2630, not to mention even lower the 1.2520, which provided some support back here. On the flip side, should the pair find extensive fresh buying orders along its path, I would expect the price action to break the 1.2970 resistance line, which was aimed for here, tested a couple of times here, and break above it, and start actively aiming for the 1.3075, which peaked the pair's price action. That was around the 18th of June. Let me correct here. 17th of June, actually. And for an extreme bullish scenario, I would be noting the 1.32 resistance level, which actually provided resistance. Let's have a look when exactly. Here it is. Yeah, and multiple touches here. It's a good one. Okay, 4 chart, tested. Yep. So we have the 1.32 as the ultimate target for the bulls here. Let's have another look at another commodity currency, and this time it would be AUD USD, which seems to be recovering quite strongly. Once again, we note RBA's interest rate decision during tomorrow's Asian session, late Asian session. And as a base scenario, we would expect the bank to deliver 50 basis points rate hike. However, I would expect also the bank to provide a more hawkish tilted forward guidance in Governor Lowe's accompanying statement. If actually so, we may see AUD USD actually jumping, but we have to note that the recent upward movement of AUD USD during today's early European session may also imply that the market has started to price in a more hawkish approach on behalf of RBA. Nevertheless, for the time being, I would expect the price action to remain at the initial stages between the 0.6950 and the 0.6850, the R1 and the S1, in a similar movement as here, when it was around from the 22nd of June until the 1st of July. That was on Friday. That would be the initial stage. However, that could also start forming an upward trend line. And that would be more obvious in the 1 hour chart. You see, we have a trough, higher trough, peak, higher peak. It's nothing conclusive. I would require more higher troughs and higher peaks in order to form a trend line, but an upward trend line seems to have started forming, and next 24 hours should verify that or not. Should the upward trend line start to form and the pair actively start aiming for 0.6950, we may see a bullish trend line being formed, an upward trend line, and that would imply that the pair is on its rise and would be able to break also the 0.6950 resistance line. And should the R1 be broken, as the next possible target, we set the 0.7035 for the bulls, given that the level has provided some resistance capabilities as well as some support capabilities. Even higher, we note the R3, the 0.7150. To the downside, and should the selling interest be expressed by the market, I wouldn't be surprised to see the price action clearly breaking once again below the 0.6850 support line and start aiming for 0.6730 support level, while even lower, we note the 0.6620. Once again, the RSI indicator is fast approaching the reading of 50 after bouncing practically on 30. And it may have reached it. Yet for a bullish sentiment, I think we would require a movement towards the reading of 70. It would be a nice, smooth upward movement. Let's have a look now at Usdchf. Okay. Price action actually verified the 0.9640 resistance line. Beautifully. The pair dropped, yet stabilized between the 0.9640 and the 0.9550. Note how the RSI indicator dropped, hit the reading of 50, rose a little bit, and is once again starting to take another aim at the reading of 50. So overall, we tend to maintain a bias for a sideways movement between the 0.9550 and the 0.9640. On the flip side, should note that for a bias for sideways movement to change, in favor of a bullish outlook, we would require clear breaking of the 0.9640 and for the price action to start actively aiming for the 0.9765. On the other hand, should the bears take over, we would expect the pair's price action to drop below the 0.9550 and start actively aiming for 0.9455. Let's have a look now at Nzd Usd. Whoa, that's been a while since we last visited the chart. Let's make the adjustments necessary. Reversing the 0.6290 into a resistance line. And we have to go a little bit hunting here. Let's have a look at the new S3. Where is it? We're going back, trying to find some support touches possibly. Okay, on the daily chart. Here we go. And it's actually a touch right here. Actually 2 touches. Ooh, that's nice. In green, please. Let's have a look. 0.6080. Ladies and gents, our new support line. Adjusting. Adjusting again. Once more. Actually, we don't need this. Let's delete it. And we have to adjust the labels from 0.6475 to 0.6418. The second resistance line would be placed at 0.6365. First resistance line now being placed at 0.6290. And the first support line at 0.6215. Second support line being placed at 0.6115. Sorry, 0.6150. And the final support line being placed at 0.6080. The big question is if there is a downward trend line here. We'll check right now. Opting. Yes and no. Seems to be so. Now in the short term, definitely the price action has been on the rise. Definitely. For the past 24 hours. You can see the price action actually bouncing on the 0.6150, and that happened on Friday and has been rising ever since, recovering ground bravely. Yet we would like to see what happens when it reaches the downward trend line. It could be that the downward trend line will be capping the upward movement of the pair. And if so, we may see Nzd Usd actually rising, hitting the downward trend line, reversing course, and taking another aim for the 0.6215, in which case we would require clear breaking of the 0.6215, and for the price action to start aiming, if not even breaching, below the 0.6150. I would like to see a lower trough once again. It's a very, very nice question. What will be happening once the price action actually reaches the downward trend line? On the flip side, should the price action actually break the downward trend line, yet not prove able to break above the R1 0.6290, that would imply practically a sideways movement between the 0.6290 and the S1 0.6215. In case of a bullish scenario, we would expect initially a breaking of the prementioned downward trend line and a breaking of the 0.6290, possibly even start aiming for 0.6365. On the other hand, I have to tell you guys that I had a colleague of mine in the research team. He noticed the following, which was actually very interesting. On a technical level, you can see that the peaks over the past 3 working sessions, let's have a look how much, since the 29th of June, have remained at around the near levels, which is the current level of price action. So that would imply some stabilization. Why? Because you would expect consecutive lower trough but also lower peaks for a downward trend line. And this actually failed to do so. Nevertheless, we'll have to wait and see. For the time being, we tend to maintain a bearish outlook and would require a breaking of the downward trend line in order for us to switch our bearish outlook in favor of either sideways movement or bullish outlook. In case the bulls take over, once again, I would expect the price action to break this downward trend line, break the 0.6290, and start actively aiming, if not even breaching, the 0.6365, which would actually create a nice upward trend line, which would be guiding the pair upwards. USD another look. Not much movement. I would expect more actually. But nevertheless, note how the pair has been on the rise in a weakening of the TRY, given that we had also today's CPI rates out for June, and CPI rates are still rising. It was characteristic that the CPI rate accelerated on a year-on-year level, but I would be highlighting also that the rate accelerated beyond expectations on a month-on-month level, implying that the inflationary pressures within the Turkish economy are very strong. And in conjunction with Central Bank of Turkey's inactivity and President Erdogan's willingness to keep rates at low levels, understandably for growth factors, but still that tends to weaken the pound. And we may see it even starting to aim for the 17 level once again. Let me make the readjustments here so we have a better chart. Should the price action of USD actually be able to break above the 17 resistance line, that would be a nice upward movement, implying that the bulls are about to take clearly charge of the pair's direction, rising and starting to aim for the 17.60. For the time being, we maintain a slightly bullish outlook. However, I would also highlight the RSI indicator, which is below our 4-hour chart and is clearly above the reading of 50 with an uptrend. Note how it has continuously been on the rise, implying that the bearish sentiment was created by the market. It wasn't a market intervention, by CBT's announcement that any business will not be able to get loans in Turkish lira if it has assets over if I'm correct, almost $1 million. It was around $890,000. That tend to provide substantial support for the lira, but slowly but steadily the lira is weakening once again and raising the gains made. Okay, let's have a look now at gold. Make the adjustments. Nothing much. I wouldn't be so excited, but nevertheless, the S1 has been broken. Now it has been turned into a resistance line, the 1807, but it resembles more sideways motion. Nevertheless, let's go hunting now for a new support line. Let's have a look. Nope. We would have to go all the way here. There you go. Now where could it be? This could be a possible level, but this could be a possible level as well. This one is here and here. This touch. You have 1, 2 unattempted, 3 touches. I would keep this one. It's let's make this color green, dark green, at 1745. And the next support line would be here. That would be 17.21. Let's readjust. And yeah. So we have the S3, the new S3 being placed at 1745 for gold's price. The S2 being placed at 1762. The S1 at 1787. The R1 being placed at 1807. Note how it was tested here. And here is the support line. Held its ground, but as the price action now seems about to break below it, it turns into support line. Wouldn't be surprised to see the price action of the precious metal actually testing the 1800. 1835, the second resistance line, and 1870 being our final resistance line for this chart. I know that the distance between the S2 and the S3 is rather narrow. It's around 17 pips, not much. And that's why we have placed also the 1721 further down the line. For the time being, should there be, or actually intensified, downward movement, I wouldn't expect that. So we had here some intensification of the downward movement, but actually the price action seems to be rising. It's being tested right now, the downward trend line. Should the downward trend line, the second one, the steepened one, actually maintain its control, I would expect the price action of gold to drop, breaking even lower possibly than the 1787, which was tested here. In that case, we may see it aiming for the 1762. On the flip side, should there be a stabilization around the 1807, that would imply practically that the downward trend line here would be broken, and the pair would maintain, or if you prefer, revolve around the 1807. In case the bulls take over, I would expect the price action to rise. Let me extend this. I would expect the price action of the precious metal to rise, break the 1807, break the steepened downward trend line, break the initial downward trend line, break also the 1835. I would require clear breaking of 1, 2, 3, 4 levels, and for the precious metals price to start aiming for the 1870. That would be a bullish scenario for me. Anything below the 1835 and above the 1807 would imply stabilization. On the flip side, should the price action drop further and start aiming, if not breaking, the 1787, that would be a confirmation for the bearish scenario of the precious metal. Let's have a look now at WTI price, which has remained rather stable between the 107.55 and the 105.10. I will have to readjust these levels, as if they have turned into, the support line here has turned into a resistance line. But overall, you could expect a sideways movement between the 107.55 and the 105.10, given also that the RSI indicator remained near the reading of 50, implying rather indecisive market. Any break above the 107.55 would imply practically an escape to the upside and that the bulls may be taking over, while any breaking of the 105.10 could imply that the bears have taken over and we may see the commodities price start aiming for the 101.25. And that should sum it up from us here at IronFX. From all of us here, once again, best wishes for solid trading.
Hello everyone, my name is Emily and welcome to our daily trading tips. The question is, what elevates someone to do world-class trader status? If a trader has a consistent positive performance, there is always room to improve further. A simple action that can be taken is to go back to their trading history and observe their activity. They could break it down and identify what has worked for them and what hasn't. With this, they can find out more about their strengths and weaknesses and do more of what works and less of what doesn't. There is also a chance of getting greedy. This could lead to taking on extra risk to become satisfied. Beware of this huge mistake, as it could be an important lesson. Everyone loves making profits. It feels great to see your account going up. It makes you feel invincible when you feel like a winner. However, this doesn't represent the whole picture when trading. What happens when you have a great idea and you place a trade and the market moves greatly against you? Do you close the position in a huge loss, or do you wait to see if the market returns to previous levels? Now that's a storm of uncertainty and fear and loss. That's the pain that traders face. That's the time when you have to stand and make a decision. No trade can make you or break you, but you have to come face to face with your pain. That's when you expand and grow as a trader. It's important that once you have chosen your trading instrument, that you approach your technical analysis with a drilling approach. Should you decide to trade in the 1-hour chart, start performing technical analysis with a wider 4-hour chart, which will give you a bigger picture of the price action and what the instrument's direction is. Then drill down to the 1-hour chart that interests you to see the current picture of the price action. Drill down to an even shorter time frame chart like the 15-minute chart to get the latest tendencies of the prices. Such an approach could provide you the big picture of instrument you are interested in. Don't rely on making trading decisions based solely on time frames, as you may miss out on the bigger picture. Thank you so much, guys, for joining us today. Stay tuned for our tomorrow's live.
Indices are used to measure and track how a basket of securities performs. For example, if you're trading the FTSE group, which measures the top 100 companies on the London Stock Exchange, then it means you're opening multiple positions on various stocks at the same time. This enables traders to build a diversified portfolio across various sectors and trade a basket of stocks in a less costly and stressful manner. Traders usually trade indices through CFDs by speculating on the price movement of indices without owning the actual asset. With indices trading, traders do not have to analyze each individual company separately because an index consists of multiple companies. This provides a more precise picture of a country's economic status. Trading a basket of shares instead of individual shares gives traders a more diversified exposure in the ability to hedge against unforeseen fluctuations from economic news updates. The indices market is a liquid market with more trading hours available compared to other markets. Therefore, traders are exposed to more opportunities for an extended period of time. Also, with indices, there is less exposure to risk compared to when trading individual stocks. Price movements are also clearer, and there are less costs involved. Although different indices are traded at different times, there are certain periods of increased volatility, especially before or after major news releases or events in the market. Other factors affecting indices prices are economic news, company announcements, commodity prices, or company financial results. Indices trading enables traders to go long or short, that is by market because traders think that the price would rise or sell a market because they think it would fall. There is also the ability to trade with leverage and hedge against losses in their trading portfolio as having a collection of various stocks. Traders may sell an index to hedge against losses.